Today we have Miles in the studio.
Nice to be here, bro.
We met briefly, I think the last time you were in Dubai. We had dinner, was it at Tel Aviv or somewhere?
Yeah, I met you at Tel Aviv.
Fantastic.
Just a guy, quiet guy sitting in the corner, but then I got to know you.
We've seen the match the other night.
Yeah, and you've got to teach me some Italian as well.
I will teach you some Italian. Today we're going to do the moon show, right? So we're going to spend all day together, go and play some pool before the game.
Are you good at pool?
I like the idea more than the game itself.
Yeah. It's a fun game, but it can be frustrating like anything if you're not good at it.
Exactly. And it's quite tricky as well because some of the guys in the studio, they play really well. So
yeah. Well, they have all day to practice.
Exactly.
When the market's boring, like they've had a whole bear market to practice, the pool skills.
So we're gonna be slaughtered today, but hey, it's more like the fun. Sometimes they do 2 versus 2, so maybe we can do like us versus whoever is brave enough to challenge us.
Yeah,
that sounds really cool. For those of whom they don't know you, do you mind to give us an intro and tell us about yourself?
Yeah, I mean, where do I even really begin? I think most people will probably know me for like my Twitter content. I think that's where I've achieved like, I guess, the most public success, I guess. A lot of people think of me as like the thread guy. Like I do a lot of deep dive analytical research on my Twitter. But more recently, I joined like Crypto Banter and I've been doing weekly live streams there like 4 or 5 times a week.
Love them.
Thank you very much. So I've been foraying into the YouTube content space. But my initial kind of crypto upbringing really more started on the investment side. I got into the space in 2019. I actually bought some Bitcoin. It's a funny story. You might delve deeper into this in a second, but ended up buying some Bitcoin, Ethereum, sitting on it. And then in 2020, when the DeFi boom really started kicking off, then I kind of just went all into crypto during that lockdown. I'm from Melbourne in Australia and we had a crazy lockdown. So pretty much that entire 2021 period, I was just focusing on investing and then just got into content naturally. I was just posting like my like investments for fun, what I was interested in, and people just, I guess, really resonated with my analysis. Yeah.
I mean, it's so fascinating. We were discussing it earlier. You have such a lovely community. They watch your video like aggressively, which is nice. Maybe like you said, because of Twitter, you started all over there and kind of migrated towards. And of course, you make some amazing content, so that explains it. But I mean, how have you gone from Bitcoin to YouTube or Twitter?
It's funny, like as a kid, I was always into YouTube. So even before like my crypto days, I was super into making videos. I used to get friends together and we used to make videos and we used to edit them and make movies. And I was also really into acting. So I did a lot of acting and I did a lot of performing arts. Like I was lead roles in a lot of musicals and stuff as a kid. I actually thought I was going to be an actor or a singer because I was in Broadway. So I kind of ventured into the realm of social media in 2018, 2019, more so through music than crypto. Because I was just like releasing music and doing some acting stuff. And that's really where like my passions lied. Whilst I was at university studying real estate. So I had a bit of a financial background as well. And I was always interested in investing and, you know, where to save money and put money. And then it's interesting when crypto kind of came to be and I started getting more interested in that side. I feel like the two worlds kind of merged, like all the knowledge I had from my music, social media stuff, and my acting days gave me like more confidence to be on camera and do things like this and live stream. And that merged with my knowledge of crypto and the investing side, which was also starting to flourish. So it's kind of interesting, you know, people kind of say, well, how'd you grow so quickly on social media? How did you like, you know, rise to prominence so quick? I think it was really years and years of, and I didn't know I was actually studying or practicing for this at the time, but it was just years of subconscious learning about, you know, performing, presenting, and social media before the worlds really combined. And yeah, it kind of happened, I guess, by accident, but now I'm here full time in the space.
What do you think we are in the market? I mean, do you buy into the 4-year cycle with Bitcoin?
I buy into the psychological effect that the 4-year cycle has. And I do think there's a certain element of legitimacy when it comes to the effect of a supply reduction, because obviously the Bitcoin issuance gets halved. But in an environment like this, where there's much less information asymmetry when it comes to something like the Bitcoin halving, more people are aware of it. It's a very big narrative. I feel like what propels it is the psychological aspect, maybe more than the tangible aspect. And I mean, this is like debated a lot. I guess I subscribe to both theories in a way, but if I had to pick one, I would say yes, I believe in the cycle, but I think every cycle is rapidly changing, and especially with institutions entering crypto at a much faster pace, I think future cycles are going to look in terms of time frame a lot different. So I wouldn't trade. Like, do I believe in the 4-year cycle? Yes, to an extent, but I wouldn't trade solely based on 4-year cycles. Like, you can't assume just because like the last 2 cycles peaked 250 days after the Bitcoin halving, that it's going to be exactly 250. I think it's going to be a range, but it even could be 2 years, you know, in this current environment. I think it's dangerous to trade like, you know, exactly on the nose of previous cycles. And the thing is, like, think about science, right? When you conduct a science experiment and you're testing rats, you're going to test 1,000 times the same experiment to make sure that the outcome's consistent. You're going to do thousands of tests, right? And then once you have a large sample size, then you'll kind of come to an outcome. With Bitcoin, for some reason, we have a sample size of 2 or 3, but really 2 because the last 2 cycles had, you know, a lot of market participants. We kind of make conclusions of a sample size of 2 because that's the only data we have. But I think it's science that would be kind of laughed at as an approach because it's a tiny sample size compared to other industries, especially like the stock market. So that's not to say it doesn't have legitimacy. It's just you have to be wary of it because it's such a small sample size. Market conditions are extremely different. This is the first quantitative tightening Bitcoin halving that we've had. And it's also the first Bitcoin halving where there's potentially a spot ETF that does change supply dynamics as well. And much more institutional interest comes in off the back of that. So yeah, it's an interesting one, but it's fun to talk about. It's fun to look at.
It's such a good point though. It's such a good point you're making about the data because it's like a teenager. This thing is a teenager. We don't have much data and things changes a lot. Like for example, like you said, now we are getting to a point where institutions are getting involved. Wall Street is going to jump in. I mean, the ETF is going to happen sooner or later, maybe January, maybe later, but it's going to happen eventually. So this is going to change. You'll have funds, people with money, they are waiting to jump in. And like you said, since the market cap is so small, it can be, you know, it can react quite quick.
We are actually sticking to pretty much exactly 2017 and 2013 aggregated. Like it looks pretty much the exact same. And even the recent rally that we've had is in line with previous rallies around this time, pre-Bitcoin halving. We haven't had that pre-halving crash yet that we typically always get. We still haven't had that 20-30% correction. But, you know, it's funny, like, I'm skeptical, but the reality is we still haven't shifted away from it just from a price action perspective. I'm sure we're going to, though. No doubt in the future. Whether it's this cycle or the next one is the question, but I can't see it remaining this cyclical forever. It has to become a bit more stable, in my opinion.
Yeah, I agree. Also because of the impact of the supply, like, you know, maybe, yes, of course, there is the reduction of the mining 50%, but I think the majority of coins are out there anyway. So I think it's going to impact less and less. And also we're going to get to a point where, you know, the fees are going to cut in half, but, you know, it's going to become such a small number that I don't think it's going to impact it. I agree. But it's going to be interesting to see how those new variables are going to impact the price and the movements of the asset itself. And of course, you know, usually in the beginning, if you look back in gold, when gold was prior ETF, it was much more volatile. Now it moves 2% a year, maybe.
Institutionalization does suppress volatility. This is a problem for retail, and it's a problem for exchanges because, like, we make the most money off volatility. The good news is, though, I think there's still probably a 2 to 3 year window before it really becomes like TradFi. Like, I think we'll still have enough volatility to make money, especially for the next couple of years, because it's still pretty unregulated. I think within 5 to 10 years, though, it will become a lot harder to make money in this space. So I do think there's a premium on money now versus money later. I think Bitcoin will end up being like a top tier asset one day. And I think you can DCA and average in as a digital gold, and Ethereum, a bit more speculative, but it's a good bet on like a technology play and on decentralization specifically regarding DeFi. But yeah, I think it's going to be harder on the altcoin front to really experience like those crazy multiples like 2021 in future years. I think we still definitely have 1 or 2 more shots at a big altcoin run. But yeah, if I had to put my hat in the ring and guess, I would say that it'll become a lot less volatile 2026 onwards, 2025 onwards, even with regulation coming in especially.
I think so. I feel we have maybe the next, this bull run. I think we started, it depends on how you count it, but for me, 15 was the bottom of the cycle. So from the bottom, we are raising up. There's going to be, I also believe there's going to be another drop before April, which is when the halving is going to occur. We don't know exactly when, let's say mid-April. We don't know because it moves the date depending on the block. But I think we're going to face it in April, which means I think we bottom at 15. I don't think we'll see Bitcoin going under 20K. It is possible we might flirt with 30 or maybe I don't know, high 20s.
Well, we have seen 25 to 30% drawdowns pre-halving.
Exactly.
Well, that's what I said. Like we've been mirroring the pattern. If it happens again, then we will get a 25% pullback. The question is whether that pullback comes after 40, 42, and then we go back down to 35, or whether it happens sooner and we go mid-20s, late 20s. I'm prepared either way. I think when it comes to investing, you should be prepared for either scenario. Well, the strategy pretty much with Bitcoin is to go progressively more risk on, like the lower you get, and progressively less risk on the higher you get. Like I would argue now is actually a time to be bullish, medium to long term, but short term. I like if you didn't get in at 25, 30 and you're looking for a trade, longing now, like the risk reward is just off, in my opinion. So it's better to wait for deep pullbacks if you're looking for like an entry. But it really depends if you're a spot or a leverage trader. Because if you're a spot trader, you can probably buy at 36, 37, 38K. And if you know Bitcoin's going to 100 one day, then it's probably okay to just keep averaging down your cost basis. But if you're a leverage trader and you want, especially altcoin entries, which are much more volatile, you've got to be more selective because the same strategy that you would apply to Bitcoin can't really be applied as like effectively with alts, or unless you're willing to experience massive drawdowns. But then you need to have a lot of disposable and discretionary income to be able to continue to average into the market. And that's, I think, something that a lot of people mess up. Yeah, they don't leave themselves enough dry powder, enough stables or income on the side to supplement investing to weight down. So yeah,
that's a good point, and it's connected to the question I wanted to ask, which is like, how do you manage? I know you trade, you're a beautiful trade. I know you do analysis, you do trades. By the way, guys, take 5 minutes in case you haven't. Go and follow Miles because his channel is awesome. I mean, how do you manage your portfolio? For example, there are some people I know, they have bags. You know, one bag is my money to forever kind of holding bags. I buy Bitcoin and I forget about it for 10, 15, 20 years. I have another bag, which is like my kind of short term, which I use to trade. And maybe a third bag, which I use to pick alts. You know, do you have a strategy or it depends on what the market does?
So I'm not a fully in and out trader. Like I know some traders that will go like either they're completely out of the market and they're completely in. I always try and maintain some long exposure to the market because I think long term, that's where the risk reward is. Like being long in crypto over an extended duration of time generally ends up rewarding holders. So that's where I try to be. But what I do tweak is allocations. So if I think the market is a high probability to go risk on, but we've had like extreme drawdowns, like now, like we're in an uptrend. If you start getting deep drawdowns in an uptrend, generally that's like a decent time to like add to all positions. And generally like the opposite, when you've had a massive uptrend and then you start to see the trend reverse, then that's generally a good time to exit. You're never going to time the bottom and you're never going to time the top. But in terms of managing like how I do that, I do like to separate things. I'm a Bitcoin and Ethereum. They're like, you know, the big daddies of the market. Like a percentage of that is long-term, like on a cold ledger that I'm probably never going to sell and just add to very slowly. But the probably larger percentage of that is more adaptive. So it's like in a wallet that I have a bit more easy access to if I do want to like rotate some into altcoins. But generally I try and stay like 30 to 50% Bitcoin and ETH. Like even in the midst of a bull market, I probably won't go that much lower than 30%. Right now I'm probably closer to 40 to 50%. I'll wait down as the market continues to progress. But they're kind of very fixed. They're adaptive positions in the sense that I might wait down slightly, but they're relatively fixed. And then the altcoin positions are much more adaptive. Like I'll take heavy profits. I'll go in a lot heavier. Generally, my rule is to buy like extreme fear on great quality fundamental alts that I like. And that's a more long-term portfolio, maybe 1 to 2 years to maximize a bull run. Like you DCA into a portfolio, I hold that portfolio. And then there's also a separate wallet, which is a hot wallet. I actually have a few hot wallets, but in your head, you can think of it as one wallet. And this hot wallet basically is like an active trading wallet where I'll take swing positions. I'll take spot longs. I might only hold them for a month or a week or a couple days, but that's like more of an active wallet because I think where people mess up is they try and be active with their long-term positions. So they use their long-term positions because they get bored, right? So they want to trade in and out of them and rotate. What I prefer to do is, because I know like naturally as a human, I need that excitement. So like I completely try and separate that excitement in a different wallet. So I can have that fun of going into a big altcoin long and, to the moon. But it's controlled because it's separated. So I think the number one advice I would give to people is, even if you have a mental plan to segregate it, physically segregate it. So have actually physically put longer term positions and shorter term positions in different wallets. And that's just going to help a lot when it comes to portfolio management, because the number one mistake I made last bull run was rotating profits. So like what my Phantom bags, for example, made massive profits, maybe 10, 20x, and Luna as well made huge profits, 20, 30x, maybe, I don't know the exact figure. But even as they were going up and I was taking profits into other alts like Solana and AVAX, maybe some Ethereum. And if you just play the rotation game, it's a hot potato game. Like eventually you're going to drop the potato. So it's much better to just DCA ladder out into stables or like fiat rather than into altcoins, because the rotation game will kill you. And that's why segregating is good, because you'll just be too tempted to rotate into short-term narrative chasing if you don't do it.
It's such a fantastic point, and it's super well said, by the way. I completely agree, because what I've done as well, especially with NFTs and all these things, if you don't allow yourself a budget and say, okay, here's my total portfolio, let's chop this off and isolate it over there. This is the long term, this is the short term, this is the NFT bag. If you don't move stuff around, you won't even realize what you're doing.
Yeah.
And what I've done myself as well, I exchanged some of the Ethereum for some of the altcoins, because I was thinking, oh, the altcoin is going to pump. So I'm going to take my profit out of Ethereum and push it into whatever coin, maybe Chainlink, maybe Cardano, whatever it might be. What I didn't realize that if I would have left them in Ethereum, it would have been much more profitable. Yeah. It would have been much smarter doing, like you said, deciding my allocation to begin with, plan the entire thing, sell into USDT, USDC, stable coins, and then rebuy back in. It would be much profitable than exchanging.
It's just a matter of planning. Yeah, I think most people go in blind because it's the easy thing to do. It's easy to open up an exchange account and just buy random crap when you feel like it and sell random crap when you feel like it. But it's much more prudent to have, and I did a thread on this, like actually like set your journaling on Excel or Google Sheets and have your allocations defined and write down your plan. Even if it's a bad plan, it's better having something written and adapting it over time than having nothing. Because I feel like 90% of market participants, they don't have any plan. It's in their head. It's not tangible. That opens the door for your plan to change. So it's always good to write down your thesis, write down your strategy, have your allocations predefined on a Google spreadsheet, your weightings, your weighting per sector, and then also your weighting per wallet. So you might have like hot wallet, long-term, medium positions, and just like do it all. If you do it on Google Sheets, the benefit versus like CoinStats or CoinTracker or CoinGecko is that you can create like pie charts and custom models. So that's something that helps me as well in terms of building long-term positions, and also tracking on an application like Coin Market Manager, which will help you track your centralized exchange trading. So if you're doing like short-term leverage trading on the side as just a way to like hedge or just get some additional exposure or just have fun, also tracking that separately is a smart thing to do. It's all just tracking. Like when it comes to fitness, it's the exact same. Like I've got this band, like it tracks calories, I track my food. I'm a bit of an obsessive person, so I love tracking everything. But how are you going to know if you're making progress or if you're sticking to the plan if you're not tracking it? It's
the same for money. Like sometimes when I talk to people, they say, oh, I'm such a bad, I don't know how to save. Well, because you don't take track of what you do. Like if you don't track where you spend money, how can you be financially okay? Yeah. Like every time you spend something, write it, try to project next month. Okay, next month I'm going to give myself an allowance for fun.
I'm such a bad spender. This is my big problem. I track everything. But yeah, I have a huge spending problem. Checking my credit card bill and doing, because I recon it all on Excel. Some months I'm just shocked. I'm like, Mars, you're just such an idiot.
Sometimes what I do, I have a plan and I sign it.
Yeah.
Because when you sign it,
signing
you're
it
so
to yourself.
pissed if you miss the goal. So you're basically promising yourself, I'm going to stick with this. I'm going to sign it. And it's going to create a bond in between you and yourself saying, oh man. And if you miss it, it's like, you're going to have disappointment phase, right?
I have a very good tip in terms of this. And look, I'm not, once again, financial management may not be my strong suit considering I've had some terrible spending months. But generally, like, and this is what I've started doing, instead of measuring monthly expenses and income in dollar terms, it's better to do it in percentage terms. So for example, this month, I have on my Google Sheets now like a column that says money, income spent, and it's represented as a percentage. So like in a month, I'll aim to spend a certain amount. That for some people, that if your expenses are high, that might be 60, 70%, you save 30. For some people like me, where there's more of a buffer, I can get it down to 25, 30%. And that's after expense. So that's the amount after business expenses. So I'll put in like how much I actually take after taxes, after business expenses, that's what I actually keep. And then I'll deduct the amount that I actually net spend. And then I'll come up with a figure. And recently I've been sitting around 25 to 35% spent, which means, you know, like 65-ish% saved, which I think is pretty good. But everyone's will change. Like if you have a family, like I'm just one guy, right? I don't have much expenses. My expenses are mostly like flights and accommodation and buying stupid things like watches and shoes and stuff like that. But for the average person, you know, if you have a family or like codependents or a house or a mortgage and cars, I don't even have a car, then you're probably going to want to sit closer to the 20 to 30% range is more realistic. But whatever you can, as long as you have that percentage figure, then you can aim towards it, right? Because if you say, I only want to spend 5,000 this month, it may not be the best figure if your income's variable. If you're on a salary, maybe it works. For me, my income just varies. Like it can double and half. So that's always just percentage for me.
The more money you have to come in, the more you can spend. It's a percentage.
Exactly. Yeah. So if you have a really good month, and you're trying to spend 30%, if you make 100K, that's, you know, you can spend 30K. You can have a whole lot of fun with 30K. If you have a bad month, I'm just picking random numbers. If you make 20K and you can only spend, 7K, then it's and I have to do November next week, which is
it's gonna be painful.
It's painful because I'm in Dubai now, and obviously it's worth it for me because I'm saving a lot of money on tax, and it's just a great place to be for connections and networking and stuff. But it is an expensive place. Like I was talking to you before, you said still like London and stuff are more expensive. That may be true, but relative to like Australia, like Dubai is, you're probably doubling or tripling your expenditure here.
On your income, there is nothing, no taxes to pay, but you can go and find a restaurant or a really expensive thing to do super quick.
You can spend the taxes on lifestyle. You can spend the tax benefit on easy if you want to.
Exactly. Yeah, and by the way, I want to ask you about Dubai, but before we move on into Dubai,
of course.
You said you have this kind of portfolio, so Ethereum and Bitcoin are majority. Do you have any pick for 2024, like altcoins that you are eyeing in, or something that attracts you specifically?
There's a few. So I like to think of altcoins in narratives, not specific alts. This is how I like to set up my portfolio. So I have narratives, and then under those narratives, I have 3 or 4 high conviction picks, and then 4 or 5 low conviction picks. So the narratives I'm looking at are real-world assets, huge vertical with treasury bills and real estate being converted on chain. What are the best plays for real-world assets? They're the oracles, right? It's the who's feeding the price data to the exchanges and the blockchains. So Chainlink, and I don't even hold any Chainlink because I missed the boat, but I'm bullish on Chainlink. Pyth as well as a new one, but there are other smaller oracles which are coming in, as well as DeFi protocols. Off the top of my head, some of which are like Pendle, for example. I think they have a lot of flexibility when it comes to adding DeFi yield. MakerDAO's doing some interesting stuff. Centrifuge. I'm not shilling these alts. I don't even really hold much of them, but that's how my brain works with the narrative stuff. That's real world assets. I think AI is a big vertical. I don't know which coins will win right now. Adjix and Fed have been the strongest proxy bets, but that's a space I'm actively watching for, especially new products that are being built. And most cycles, the new coins tend to outperform old coins. So I'm really interested in the new AI projects. Crypto gaming is super interesting. Okay, great. Gaming applications today aren't so great. I don't even know if next year people will actually be playing crypto games. But what I do know is that retail really likes this crypto gaming narrative. So whatever you say about crypto gaming, the reality is like retail understands it. It's like almost a meme. They're almost meme coins in the sense that maybe they'll actually never take off the current games, but people love speculating on crypto gaming. And, you've got people like Becca, Elio, these big creators, very passionate about gaming, which obviously helps when you have mainstream support like that. And narratives often do take off from influencers in crypto, for better or for worse. So I think crypto gaming is a good one. I mean, I've got a few high conviction picks there. PYR, which I've talked about publicly. Nakamoto Games is a studio. I prefer the studios. So any product that's more infrastructure based, IMX, more studio based, I like. So that's real assets, that's AI, that's gaming. What else? There's a few other, there's lots of other narratives, but those are probably the top 3 like retail narratives. And then there's a bunch of DeFi stuff that I play around with, but more low cap and less conviction, but based on just narratives and trends that I see on Twitter. So that's kind of how I view my portfolio, yeah.
I like how you explain it because it says a lot about you as opposed to, I like this thing because it's done 2x, 10x, 100x. No, it's like, okay, what is the narrative? Let me zoom in and find some of the ones they perform really well.
Yeah, it's trends. Like ZK is another one. So like I like to take the trends I have the most conviction in and then look into the leaders and the strongest coins in those under those trends. That's the best way that that's why my portfolio, if you look at the pie chart, it's actually based on sectors. because that's how I like to think of altcoins, and it helps me actually structure my portfolio. Because if you go in blind, and this is something I did last bull run, because the price was going crazy, you end up weighting very heavily maybe towards a sector. My whole portfolio was L1s, and they were performing well, so it was fine, but you have to be cognizant of it. And maybe if I was more cognizant of overweighting, I would have been a bit more diversified last bull run. And by the way, I still think L1s are good and L2s, because they're proxies for like a bunch of narratives. So if you can pick the next hot chain, then that's going to be home to reward assets, AI, and gaming. So it's always good to have a few of them as well, but I treat that separately. Like there's altcoins and then there's altcoins. The altcoins I'm talking about are maybe low to mid caps. Large caps are a separate part of my portfolio where I may have like 5 to 10 high conviction long-term bets on like things like, aside from Ethereum, like, Solana, some of the other L2s, Arbitrum, like some of the newer L2s I'm interested in once they launch. So that's like almost a separate category. Yeah. You got your large caps like Bitcoin, ETH, and then you've got your like mid to large alts, which is like Solana, like DOT, as you mentioned, Cardano, etc. And then you've got your altcoins. And altcoins, I like doing the narrative thing. I'm publicly not bullish on DOT at all, not bullish on Cardano at all, not bullish on XRP at all. There might be people in the comments which hate me for this, but it's just my opinion.
Is what it is, yeah.
I understand the XRP thesis more than DOT and ADA. I don't really understand, and maybe I'm being controversial for bringing this up, but I haven't seen any tangible development to excite me. And I haven't seen many dApps that I'm excited about building on DOT or ADA. Like most of the quality dApps that I'm seeing that I'm like, wow, you're doing cool. They're deploying across, ZK Sync when it launches. They have privacy preserving elements. Maybe they've already deployed across the existing EVM chains. Solana, there's a lot of really cool products being built. So I like to pick the chains based on where the apps are. Because at the end of the day, the users are using the apps.
They're building, yeah.
I'm looking for the chains with the best developer ecosystems. Who have the best developer ecosystems? Ethereum and L2s, undoubtedly, just because that's where the wealth effect is. There's a lot of money in ETH. It's very easy to bridge to EVM. That's where the money concentrates. Yeah. But then I'm also looking at other blockchains like Solana, who have a pretty diverse dev ecosystem as well. And then there are emerging ones which are now starting to like carve out their own niches, like Sui, that recently I've become more interested in because I'm starting to see some good applications being built there. There's smaller blockchains like, Injective, Say Network on Cosmos, which are interesting too. So those are, where there's like genuine applications and genuine development occurring, that's what I'm more interested in versus, and that's, I'm not hating on ADA or DOT. I just, for the valuations, I don't see, like I'd rather just invest in some of the ones I just spoke about because that's where I see tangible.
And by the way, it's not physically possible to own every single. There is too many coins, so you have to make your choices.
You can buy an index, but at that point, well, maybe for like an investor that just wants passive exposure, you could just buy an index, and there are indexes available, or just Bitcoin, ETH. If you're just not in this space at all and you just want general market upside, it actually may work. But my goal is to beat the market because the general total in crypto index, it might 4x or 3x in a bull run. I mean, ideally, I would be aiming for a 10 to 20x on my like principal holdings. I know maybe on Bitcoin and ETH that's not possible this run, but on overall, I would, with the information like asymmetry I think I have, like as someone that's deep in the space, as a creator in the space, I feel like I've got a decent edge to be able to 10, 20x. Yeah. So for me, it makes sense to build a custom portfolio allocation. But it's funny, for some average investors, you probably could just take the index approach. But it's such a good point.
Sorry to jump in. It's such a good point is when people are asking you, what's a good car? Well, it depends. Yeah. Do you have a family? Are you single? Do you like sport cars? Yeah. Where do you live? Do you live in the snow, in the sea, in the sand? I mean, how can I pick a car? It depends. So you said it so well. It depends on, for example, you are so invested in the space, which means you monitor everything. You are diving deep into things. It makes sense that you allocate a portion of your portfolio in some really high risk coin because they're going to give you the most of the returns. Whether if you are someone who has no idea what he or she or they are doing, just buy Bitcoin and forget about it. And it
depends how much risk, as you said. Like for me, I'm young. Like I'm 23. I don't have any codependence. I have like enough real world investments that even if crypto went to zero, like I'm going to be okay.
You're fine.
Yes, it would hurt me a lot, but I'd survive. I'm not going to be on the streets, right? So for the average, like you got to think about your situation. If that's your last $1,000, you have to be much more conservative. If you're willing to just blow money and take risks, and that's, to be honest, where I would consider myself to be, then I have the luxury and the privilege of being able to, take on more risk. So you just really have to decide like how much you value that money. I'm just young and the risk reward for me is huge. Like if crypto succeeds, And that's generational wealth for my kids, my grandkids, great grandkids potentially. If it fails, like it's okay. I'm young. I'll rebuild. Like it's fine. It's kind of,
It's really well said as well. Like, you have to think about, how much money, because, there are some people maybe they watch some videos and they go, I'm going to all in Shiba Inu or whatever the Pepe coin. I mean, you can gamble. It's like going to the casino and just go all in on the 7th red. Dude.
And I do that. It's fun.
Yeah, exactly. But not with everything you've got.
If it's your last money, no.
Exactly. I mean, you don't mortgage your house and go to the casino. No. I mean, take a portion of your...
And what if you take it to the casino? Like if I get a few $1,000s out and I go to the casino, I'm willing to I'm happy to lose that money. And at the end of the night, I'm not upset. Like because that's the cost of the fun.
Exactly.
So if you're investing in meme coins, you have to view it like that.
Exactly. And nothing is wrong. I mean, many people have made a lot of money with Pepe, with Doge, Shiba Inu. That's totally fine. But my advice will be take your portfolio, chop it into pieces and say, with this much, which is probably 1%, 0.5%, whatever, I want to have fun with. Yeah. Great. But then the other, just keep it safe. Yeah. And depending on your risk tolerance, on your time frame, on your personality, on risk tolerance, blah, 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 you then allocate some to some stuff. My portfolio is super simple. I have 5 coins in my portfolio. That's it. I have Bitcoin and Ethereum. They have the majority of my portfolio. I got some Cardano because I got in early, even though I feel like they have to prove themselves. I absolutely love Chainlink, and I've been accumulating at $5, $6.
I'm disappointed in myself when it comes to Chainlink because I held it last bull run, but I didn't. Firstly, I don't think their tokenomics are great. I think they did improve it with 2.0, but I don't think it's fantastic from a value accrual perspective. But yeah, the longer I've spent in the space, and really like a few months ago, it really clicked for me. Like speaking to Chainlink people and trying to delve a bit deeper into oracles, it clicked. Especially in the real world asset front.
I like what you said earlier. You're saying, okay, if I do niche into a narrative and I find a good coin, then I can find their competitors.
Exactly.
So I think Chainlink now is what, $14? I think we're going to go to the next bull run. It's going to be 120 easy. It's a no-brainer.
When something's been and survived through a cycle, it's a good indicator that it might do it again.
I am super bullish on Chainlink. But again, I mean, most of my portfolio is in Bitcoin.
Yeah.
So
you can still like coins and not hold them. This is what people don't... I have 10 coins that I would love to own that I don't own because you can't time your entries on everything. I got some amazing entries on like specifically Solana. I got a great bear market entry. I got a great bear market entry on Ethereum at $900. I tweeted about it. I got a great entry on Lido. I got a slightly worse but okay entry on Bitcoin. I missed Chainlink. I missed like Nakamoto. There were some things I missed and that's fine. Like I'm not going to ape into them now because I missed them. I'll $5,000 to invest. I think that's roughly the average most of my viewers at least would have like around that amount. With 5K, you're not really going to change your life in a Chainlink or Bitcoin. But then again, there's expectation management. Should you be expecting to retire
5 million
on 5,000? Like you can, and people have done it, but maybe there needs to be a bit of both, like a tweaking of expectations and allocations. I realized probably the amount you need to actually start even thinking about like retirement, quit your job kind of money is closer to 100K invested in the market. Just considering like a 10X is like a decent benchmark to expect over like a 5-year period, let's say. And even that's crazy compared to traditional finance. And even at a 10X, I don't know, it depends where you live. Even $1 million for me wouldn't retire me. In Dubai, you'd need at least, in my opinion, 10-ish.
I mean, especially I think in terms of how much money I have, cash flow coming in without doing anything. That's my kind of retirement plan. For example, I would much rather take a fixed amount of money per month, 20K per month, as opposed to $5 million.
It's all lifestyle.
Exactly. Yeah. But like you said, it all depends. But I agree with you. I also think it depends on your time frame. For example, if you have 20K, 30K, and you want to invest for 10 years, buy Bitcoin, you'll be fine.
Yeah.
But you have to wait 10 years.
Yeah.
Because it moves so slow. And I think that's my opinion, diminishing returns. Like the more we go forward in time and the lowest the return is going to be. Now we are 30-something K? Are we getting to 100? Possibly.
I think the run up to 100 can be super aggressive. Like think about last bull run, retail saturation at 70 was huge. Like the amount of interest in the space was massive. If we got to 100 again, that retail interest it'd be super, super, super high at that point. So I feel like 100 is like kind of around the level where you might start to see things plateau. Like I know a lot of creators are saying, and this is just rubbish talk. Like what do I know? Like it's just speculation.
Same.
Some creators are saying 250, 500, $1 million. I think based on some price models, like that's realistic. But For me, I feel like we will see some sort of diminishing return, like around the 100K zone.
100%. I agree.
But if Bitcoin 4X's, like some alts are going to 50X.
Yeah, exactly.
So like to be honest, I don't even need 100K Bitcoin. All I need is like a 60K Bitcoin to make crazy generational wealth. 60K. That's all. Like you don't need 200K Bitcoin unless you're all in Bitcoin.
Yep.
So that's where being an alts kind of is good. You don't need you don't need to hit 200K Bitcoin to make.
That's exactly how I see it. You have invested money into Bitcoin, and when Bitcoin start pumping up, you take some of the profits and you invest them into small cap, because altcoin season happens only after Bitcoin has gone through, right? There are seasons, right? But 100K, there's going to be so many people selling. And like you said earlier, most of the people they made, when you read the newspaper, Dogecoin millionaire. First of all, that's an exception. Second of all, everybody has sold already. Like if you have, even in Bitcoin, so whoever accumulated at $1, $5, how many of those people still have Bitcoins? Question mark. Probably a few.
Da Vinci.
Da Vinci. Shout out to Da Vinci. Yes. If you buy an asset at $1 and we are now at 30 something thousand, I mean, I'm sure you've sold. Either you forgot you had it, or you couldn't find the keys, or someone has been keeping it for you. Otherwise, you would sell. Not everything, but you would start unleashing the market. So those super millionaire, they made it. It's like really rare. There are people they made million with $1,000, but that's not the average.
You won't get
investor.
that in Bitcoin now. Like Bitcoin is, since it's becoming more institutionalized, it's becoming more respected as an asset. I wouldn't be comfortable holding certain amounts in alts, but I might be starting to get comfortable holding, larger amounts in Bitcoin for the longer term. I kind of am treating it more like my stock portfolio now in terms of allocation, like how much would I allocate to an index fund? This is very risky for a TradFi guy. They'd be like, you're crazy. For a crypto guy, this is too conservative. So it depends. But,
exactly.
But I will kind of like think of it more as a stock.
Yeah.
So more long-term, yes, it's a growth asset. It's a risk asset still, but eventually I think it does become a more of a store of value. I mean, proof's in the pudding when it comes to seeing that one unfold.
I mean, of course, but you have the limited supply, 21 million. Some of them have lost forever. So we're talking about 17, maybe 16.
That's the strongest narrative Bitcoin has.
Exactly.
Hard money. I mean, if no one's read this book, read this book, Bitcoin Standard, because this was one of my introductions in 2019.
I love it. It's a great book, yeah.
And this will explain pretty much the thesis. It's very simple. Yeah. Money printing is inevitable. If every currency eventually goes to zero, and you need hard assets that aren't inflated in society just for like asset protection. So the only way to do that's through hard assets. That can be real estate, that can be silver, that can be gold. But Bitcoin has benefits being digital. Bitcoin has benefits being like more easily traded. Obviously, it can't be seized by any sort of intermediary, and it can't be like gold and silver can technically be produced. Of course, like the rate in which gold can be mined is diminishes, but that's not transparent. Bitcoin's transparent. Like, you can see the blockchain, you know how much is being mined, you know what's coded into the blockchain. Whereas gold, we don't have like full transparency over how much these gold miners are storing, hoarding. Like diamonds, for example, like that, I truly believe the diamond market is heavily manipulated by the big companies that are suppressing the supply of diamonds to make them more valuable. Even though diamonds are actually quite prevalent in the ground, like more prevalent than you would think given the cost, but they're jewelry companies, big precious metals companies, that they don't want to release all the supply. They don't want to dump the price of things like diamonds. Similar thing can happen with gold. The pro argument for gold is it also has more of a tangible use in conductivity and electronics. So I'm actually a bit of a gold bug. Like I really do like gold as an asset as well.
Nice.
That's gold. That's the gold benefit. And the other benefit is Bitcoin is still risky. There are some risks when it comes to this technology and regulation, etc. But Bitcoin certainly has its benefits too. So gold and Bitcoin I both love as hard asset investments alongside real estate. And altcoins and all this other speculative stuff, they should be your proxies to make wealth, to invest in hard assets. So the goal in life is accumulate hard assets. How do you get there? Most of the people watching this video are probably still in this stage. How do you get there? And even like to an extent I am, because like I still want to, and you, like I want to create more wealth, and most wealthy people also want to create more wealth. So it's good to think of alts and these speculative tech investments as ways to top up your hard asset portfolio. And for me, that eventually that'll be like a bigger real estate portfolio, gold, Bitcoin, stocks aren't hard assets, but they're more in the make money category. But I don't know, S&P's pretty much just been up only ever since it launched because money printing is crazy. So that's also a decent long-term investment.
Like you said earlier, you have to be mindful that it is possible to make $1 million with $1,000, but it's not probable. It is possible, right? Many people have done it. Yes, kudos to them. They made whatever they bought. It doesn't matter. This is not the average. The average person is going to buy the top and sell the bottom and lose all their money because they're going to ape into some meme coin that their cousin have told them to buy.
I'll say something controversial against, it's not controversial because in my opinion, it's true, but it's against what creators would want you to think because a lot of creators, they rely on like attention, right? And we want people to watch our videos. Yep. But I would say it's better to spend 90% of your time focusing on how to make more income. 10% of that should be on where to invest it. And I think that is a little bit skewed. People are spending 90% of their time worrying about how to spend their $4,000. If you spent that 90% effort on how to make more money, you'd be in a completely different league. So like, if you don't have much accessible income, I would spend my time learning about e-commerce, drop shipping, social media. If you want an online job in real life, any tangible skill is going to get you there, especially with like AI and stuff. I think like the engineering, like trade skills are going to be in very high demand. I think white will be a different conversation, but we will see a shift from white collar into blue collar. I truly believe that. So even a tangible skill, you should focus on like learning skills and monetizing them with 90% of your time. And sure, the 10% of your time spent on investing can reap some great rewards, but if you have $5,000, $10,000, it's just focus on making money, man. Like
it's such a good point because everyone nowadays, everyone wants to make money fast with no effort.
Yeah, that's what people think crypto is, and it's hard because it's true sometimes. So, but you just can still make a 20x in crypto and 20x your skills at the same time. Like that's what I've been doing. Like as well as my investing, I'm learning a lot about business. That's my social media business, but that's also other business endeavors I've been getting into. So if
you want to chop down a tree, I advise you to spend half time in sharpening your blade. You do your job, your 8 to 5 or whatever job, then get another job on the weekends and get paid in crypto.
If you cut out all you'd be surprised how much time we really have. And I'm guilty of this sometimes as well, but I've really tried to make a concerted effort. Something I'm really passionate about is productivity, to like really trim the fat off my days. Like the fat for most people being, Netflix, crazy YouTube consumption. If you actually go into your screen time and look at it's crazy. Yeah. Like, Netflix, YouTube, all the fat trimming. I think I really try and like go a little bit monk mode in the sense that like we're speaking about this before, like my best productivity is when I'm just focused on work and I'm working all day and then maybe I'll make some time on the weekend for some socializing. But in general life, if you want that productivity edge, you've just got to cut down the distractions. There's a lot of fat. You got to just trim it off.
It's all about the plan. Like you said, I mean, I've made a promise to myself. I think a few months ago, I said, I want to be in a place where I produce more content than I watch.
Challenging.
Exactly. But then you measure and you say, okay, then if I'm not producing this much, I'm not allowing myself to watch that much. Let me plan, because it's really easy to laze out on the sofa, watch content, watch Netflix and not producing anything, and then moaning about your life. So again, what are you going to do about it?
I have a super easy productivity tip, and maybe it's a terrible advice, but maybe it's this works for me. Every minute of the day, and even put it on your lock screen, remind yourself to be doing something. Now that might sound super simple, but every moment of the waking day should be at least doing something. So I'll kind of break it down further. This can be anything productive, from like actual deep work or learning a new skill. It can even be a bit lighter, like doing your taxes or something, or bills like you've been putting off.
Productivity.
As long as you're doing something towards getting where you want to be, I always remind myself, and I think it's actually my lock screen. Yeah, I will make decisions today that will make my future self proud. And pretty much what that's about is just, at the end of the day, like the only person you're going to let down from not acting is yourself. So every action you take should be to like make your future life better. If you're not doing that, then you're just doing yourself a disservice. For example, my brain at like 9, 10 p.m. Like I just physically can't write another thread, or so there's a point where you've got that limitation. So I'm not saying like work yourself to death, but it's just about being more cognizant of the time you spend and where you spend that time, and whether you want to put something like that on your lock screen or just keep reminding yourself. There's many things you can do. I would recommend actually reading, if anyone hasn't, read Atomic Habits by James Clear. That's probably my number one productivity book because it's
nice.
It's simplified, but it's actionable. So like, I feel like after reading that book, you'll understand on a high level the human brain a lot better. Like
you do need to rest. It's like when you go to the gym, you need a rest day.
Yeah.
You know, you can't just work out every day. As long as you measure how much you're working out as opposed to how much you're resting, and you have a balance in between the two, I think otherwise there is no progress. And hence why sometimes I struggle and I go through, I don't know if you know this, but 90% of the channel on YouTube, they have not reached 1,000 subscribers. So only 10% of the channel on YouTube have 1,000.
Wow.
Then, of course, the bigger the channel becomes, the smaller the percentage of channel is.
Mr. Beast said it well. Like he's the YouTube king. He said, I have people come up to me and they complain like I'm not blowing up on YouTube. Why aren't I getting followers? And he asked them how many videos you made. They say 5, 10, 20. He said, make 100 videos, improve one thing every time. It can be small. It can be audio. It can be content. It can be editing, but improve one thing, title, thumbnail, one tiny thing every time. Make 100 videos, then come back to me. If you're still not growing, then we'll have a conversation. I'm constantly fighting against myself a lot of the time, but I really try and not be lazy.
And I'm sure you enjoy what you do, so that's the number one recipe.
100%.
You love what you do, you are motivated, you are committed to the cause, then success in his
And that's where you get your edge over the world. Like that's
exactly
your competition. Like as bad as it sounds, in terms of money, it's capitalism in the sense that you're all fighting over the same amount of dollars. There's the same amount of dollars and they are printing, but it's the same money going around. Business is basically finding a way to get that money in your pocket and out of someone else's pocket. And even in crypto, how you do that is, unfortunate as it sounds, it's some retail guy buying the top of your bag. Like that's how you make money, and it's stocks as well. And it's selling a car. So you have to find a way to get an edge over everyone else. So in terms of productivity and stuff, hard work is one way to get an edge. Consistency is one way to get an edge. Learning a high value skill is another way to get an edge. You've just got to figure out how to get that edge. Like I started my Twitter account in 2013. I wasn't really posting about crypto till 2020, but there was a lot of crap posting until I found like some success on Twitter. And I wasn't trying to grow a Twitter account at the time. I was just doing it for fun. But even if you look at the fun tweets, there was thousands before the viral tweets came. There's that amazing photo, and the guy that's mining for the diamonds. So one guy's giving up and he's like that far away from diamonds. And then the other guy's behind him, but he's going to keep mining. He's going to hit the diamonds. It's a great visual. That's just life, basically.
And the funny thing is whoever is not giving up gets all the diamonds. Yeah. Right? Because everyone else has gave up.
It's a great visual. I mean, we could have saved 20 minutes and just shown them that picture. That's the point we're trying to make. Yeah. It's a great visual, yeah.
What would you say to someone who's in 2023 new in crypto, he, she, or they are about to jump into crypto? What would be that one thing you can tell them?
I would just learn. I would just soak in and learn as much as possible. I would try learning about I would start with Bitcoin. Have to start with Bitcoin. Maybe start learning about alts, watch some quality content creators. But what I would actually, like us. But what I would actually try and do is find like a niche. I think the easiest way to get an edge is not by being a generalist. It's by being an expert in one niche. The reason I say like experiment with a bunch of stuff is because you need to find what you're passionate about. But if you can try and find that thing like gaming, like AI, like DeFi, maybe it's even, I don't know, Bitcoin, trading, like there's many different ways to get an edge, but finding a niche you're really passionate about and becoming an expert in that field, that should be your goal as a new investor in the market. It's to find your thing. Maybe to find your thing, you need to watch a lot of content. You need to get your hands dirty in Discord. You need to be on Twitter. You need to be on Telegram. Maybe you even need to lose some money, invest some money, lose it. It's much easier to learn the lessons when you've lost your own money, like I have in the past. I've made money, I've lost money. I did a thread recently about the 10 biggest lessons I learned. All those lessons were through losing money because you'll actually learn the most stuff off the losses. And eventually, if you're really into the space, there's not just opportunities on the investment side. There are so many jobs in this space. Like I know people that just started on Twitter and started investing, ended up becoming ZK experts or, you know, like gaming experts and have ended up advising the top projects and working on BD or working on marketing strategy or communications for them just because they became an expert. So don't think so linearly about like the opportunities that are just in investing. Like for me, I created a whole content business out of investing, which was initially, you know, just for myself. So never limit yourself. Because you may find by becoming an expert in that thing, there are so many opportunities to work in the space, to be in the space. From the hiring I have tried to do, it's very hard to find like amazing quality researchers or creators or people with an understanding of the space. That's also a huge niche. Like you could pretty much walk into any major crypto, like I'm talking Crypto Banter, I'm talking George, Cryptos R Us, BitBoy, like myself, Carl the Moon. If you've got a skill that you can give them for a cost that makes sense, they're going to hire you. And the same with projects, Binance, Bybit, the big exchanges like ZK Sync, Ethereum. Like if you can offer something to a project, they're also probably going to hire you. So it's an interesting angle that isn't really touched on much. But if you can find a way to get into that space, you can. I mean, life's just about bringing value to others. If you bring value to someone, like, you know, you can take value back. That's all business is. It's just giving value. So if you can find a way to give value to crypto projects or crypto companies, then that's also one angle. So obviously you need to start with investing to get there, but that's what I did. I started with investing and I got there. So yeah, amazing. I'd say that's a huge thing.
And by the way, guys, I'm going to leave Miles' details in the comment down below.
Comment below, like I watched the whole video if you actually watch the whole video.
Let us know in the
That'd
comment.
be amazing to see who the...
But it's been awesome having you on the show. I've been
amazing.
I've been
Thank you very much.
Thanks. And guys, we'll see you on the next one.
See you later.